Ladies and gentlemen, good day and welcome to Century Enka Limited earnings conference call hosted by Quantum Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Sharma from Quantum Securities. Thank you, and over to you, sir.
Yeah, thank you, Aman. On behalf of Quantum Securities, we welcome you all to Q3 FY23 result conference call of Century Enka Limited. We thank the management for giving us the opportunity to host this call. The management is represented by Mr. Suresh Sodani, Managing Director, and Mr. Krishna Gopal Latsarai, Chief Financial Officer. I now hand over the call to Mr. Suresh Sodani. Over to you, sir.
Good afternoon, everyone, and welcome to Q3 FY23 earnings conference call of Century Enka Limited. Firstly, let me thank our host, Quantum Securities, for hosting this earnings call. Now, let me first brief you on the key operational highlights for the third quarter of financial year 22-23, after which our CFO, Mr. Latsarai, will brief you on financials. Our revenues in the third quarter declined by around 9% due to 9% decline in volumes year-on-year basis. There was a moderation in replacement demand and lower tire exports as a result of global slowdown, which impacted the NTCF demand. The sharp drop in Chinese NTCF prices combined with high levels of power and fuel prices have impacted NTCF margins. OEM demand for tires has improved, but demand for two-wheeler tires remains below pre-pandemic levels. While the near-term outlook will be influenced by geopolitical developments and a recovery in Chinese demand, medium to long-term prospects remain stable due to India's infrastructure development plans and overall growth prospects. In nylon filament yarn segments, as also witnessed lower demand as weavers were in wait-and-watch mode due to falling prices scenario. NFI margins were impacted by sharp price corrections in line with caprolactam price corrections. While our costs remained elevated due to higher stock in trade, power and fuel costs have also soared. China is dumping in India at lower slowdown in the country, which is impeding our ability to pass on cost increases. Imports from China have increased by 51% for the 9-month period FY23 compared to same period previous year. Caprolactam prices fell further in Q3 FY24. The decline combined for Q2 and Q3 is about 26%. We expect stability and recovery in caprolactam prices as economic activities resume in China post-holidays. On capex fronts, all capex approved by the board are broadly on schedule. In 9 months FY23, there is a cash outflow of rupees 219 crores for the ongoing capex. The NTCF expansion is expected to be commissioned by Q4 FY23, while the full capacity of polyester tire cord fabric is expected to be commissioned by next year in fourth quarter. Lastly, the NFI capacity expansion will also be completed in Q4 FY24. Now I request our CFO, Mr. Krishna Latsarai, to brief you on financial performance.
Good afternoon, everyone, and welcome to this earnings call. Let me give you some of the key highlights of the financial results. The operating revenue for third quarter of financial year 2023 stood at 468 crores, a decline of 17% year-on-year. EBITDA for the quarter stood at 21 crores, a decline of 73% year-on-year, representing EBITDA margin of 4.42%. Net profit was reported at 10 crores, which is a decline of 80% year-on-year, representing a PAT margin of 2.13%. NTCF sale for Q3 FY23 declined by 1%, and it was at 253 crores for the quarter, while NFI sales for the quarter was 30% lower at 189 crores. The operating revenue for 9 months ended financial year 2023 stood at 1599 crores, which increased by 5% year-on-year and stood at increased by 5% year-on-year. EBITDA stood at 120 crores, which declined by about 39% year-on-year, representing an EBITDA margin of 7.48%. Net profit was reported at 76 crores, which was a decline of 44%, and PAT margin for the 9 months was 4.74%. NTCF sales for 9 months FY23 increased by 5% to 813 crores, and NFI sales increased by 4% to 692 crores. With this, we can now open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time may please press star and 1. The first question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, all high-priced caprolactam inventory has been utilized, or we will see inventory losses in this quarter also. So what was the caprolactam prices at the end of the third quarter, and what are the caprolactam prices right now, sir?
At end of quarter 3, I mean end of quarter 2, the prices were in the range of $1,700, which had reduced to end of quarter 3 by December between $1,600 to $1,630. The prices had slightly improved from mid to January between $1,650 to $1,700. They are currently stable at about $1,700. Post the holiday season in China, the prices have slightly improved. These will continue to depend on the geopolitical issues as well as the Chinese demand for the products, the downstream products or the actual final products from caprolactam in the domestic markets. But we do expect prices to be more stable compared to the previous 2 quarters. And our inventory gets replaced on regular basis. So most of the old inventories get consumed on regular basis. So the new replacements would be more at the current prices.
So in this quarter, we may not see any inventory loss, right, sir?
If the prices do not fall further, yes, we can say that. But as I said, these are very uncertain times. One of the 2 important factors which will determine the price levels is the crude prices and the underlying benzene prices, which impact caprolactam, and second would be the demand for caprolactam and products in domestic Chinese market.
Okay, so at any given point of time, we have how many months of consumption as inventory, sir?
Our inventory cycle from raw materials to the finished goods is normally in the range of 45 to 60 days.
45 to 60 days. And sir, you have given the sales for NTF and NFY for 3 months and 9 months, but can you give the quantity as well?
No, we report our results in single segments. So we just give the value terms breakup of our sales. Otherwise, all the reports are in right up to the EBITDA is on single segment basis.
Okay, so you would not like to give NTF and NFY quantity separately, right, sir? Yeah.
Yeah, as we are reporting in single segments.
Okay, okay, sir. And sir, what is our current capacity for NTF and NFY, and post expansion, what they will be?
So the current capacity is 78,000 tons per annum. We expect the capacity to increase to 86,000 post commissioning of our NTCF expansion, and further increase to 94,000 post our expansion of PTCF and the nylon filament yarn.
So this 78, 86, 94 is inclusive of all three segments, NTF, NFY, and this polyester tire cord?
Yes, yes.
Okay, so there also you would not like to break the capacity separately?
Yes, for competitive reasons, and even the since we'll continue to report, these are all polymer-based single line products. We'll continue to report on single segment basis.
Okay, so what will be the cumulative capex till 2024 when PTCF expansion will be completed?
It will be in the range of between 375 to 400 crores. Plus,
out of which,
which I mean, this does not include any further capex that the board may consider for the next financial year.
Okay, okay. But PTCF has a higher profitability, right, sir?
PTCF is a growing demand because PTCF is used in passenger cars as a reinforcement, and as you would have seen that the passenger car growth and obviously the tires for passenger cars requirement is growing. So PTCF, we expect that it will continue to grow with increased GDP and ability of a large number of people to purchase their own vehicles. So hence that's the reason that we have entered into PTCF. And yes, the PTCF would be growing on a continuous basis in line with the way other countries have experienced the growth of passenger vehicles. We also expect that our passenger vehicle, personal vehicles segment should continue to grow.
So from 78 to 94, all capacity addition will be in PTCF segment only?
No, as I said, part of it is NTCF, which will be commissioned by end of this financial year, and the balance would be in PTCF and some capacity in NFI as well.
Okay, sir. Thank you very much. And if I have further questions, I'll join back with you. Thank you.
Thank you.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, thank you very much for this opportunity. Sir, I'm trying to understand that our market capitalization is roughly 800 crore. Our average operating cash flow is around 150 crore, and we have around 250 crore of net cash on the books. So and promoter shareholding is less than 25%. So considering all these factors, so doesn't it make sense for the company to do an open market share buyback so that the cash on the books can be utilized in the best possible manner, in the most tax efficient manner, and the promoter shareholding can also rise, which will increase the confidence of the investor community. So what are your thoughts on the same?
I think this has come up in previous earnings call as well. These are issues which are deliberated at the board level, and the board would take appropriate decision on this regard. As management, we are not able to commit on what kind of decision would be taken, but just to assure you that these are discussed at board level, and as and when any decision is taken on this regard, and because that's beyond management to comment on or to commit upon what will be the action taken on this regard.
Sure, sir. We understand, sir. It's just that the net worth is 1,300 crore and market cap is 800 crore, and we have huge historical real estate at negligible value on our books. So if you could just take this proposal to the board on behalf of the shareholders, just as a feedback from the shareholders. So that will be great. And sir, now secondly, sir, also wanted to understand that, sir, we had our plants in Bharuch, in Raigad and Bhotri. Sir, so but in the investor presentation, it mentions that we have only 2 plants. So which of these 3 locations have we stopped operating in?
No, our Mahad plant has been non-operational since 2013.
Okay.
We only have 2 operating plants. One is in Bharuch, Gujarat, and second in Pune, in Bhotri, Pune.
So, what are the plans for the Raigad real estate? I mean, are there any plans to dispose of the same?
No, I mean, there's no plan to dispose it off because it's in the industrial area. Projects will be evaluated if possible. If anything suitable project can come at that site, that would be the first choice. However, there is no decision taken on what is to be done in the near term on that plot.
Right, sir. And also, sir, our volumes have fallen during these 9 months. So now that we are increasing capacity, so with the increased capacity, are you confident that we will be able to ramp up our production?
See, this lower demand is, lower production is a result of a lot of geopolitical issues during the current financial year, particularly the war, which has impacted the export of tires to Europe as well as US, and US due to other reasons. Export of tires forms a major portion of the total tire production in India, in which ultimately impacts all the raw materials which go into the tires. Secondly, because of the high prices of underlying raw materials, the tire prices per se had gone up during the current financial year, so which has impacted the replacement market of the medium and heavy vehicles. We are seeing, as also witnessed in the underlying caprolactam prices, similarly on the other raw materials which go into manufacture of tires, there is a general feeling that the pricing should correct to more normalized levels, and the demand which was kind of deferred or reduced due to multiple factors should come to normal levels in the next financial year, especially starting from maybe Q1 or Q2 of next financial year. So we hope that the demand would again bounce back, and that would reflect in more production of all materials in the value chain of tire production, and hence we are optimistic that post expansion we should be able to utilize the large capacity of the expanded capacity as well.
Right, sir. So, and lastly, wanted to understand the status of anti-dumping duty on both our segments, NTCF and NYF.
No, while there was positive recommendation from DGTR for imposing anti-dumping duty, the Finance Ministry, and not only in our case, in most of the cases, has not been recommending anti-dumping duties on, particularly on what they consider as raw materials for the finished goods. So, no anti-dumping duty is currently applicable on either segment.
Okay, sir. Okay, sir. Thank you very much, sir, and best of luck. And sir, kindly take that suggestion about buyback to the board. Thank you.
Thank you.
Thank you. The next question is from the line of Vikram Kota from Ace Lansdowne Investments. Please go ahead.
Yeah, thank you. Suresh, I have one question for you. That what are the total capex plan when you plan, and how much is spent, and how much is to be spent from now on?
So, in the current financial year, in the 9 months, we have already spent about 219 crores.
Right.
And the balance, we expect another 25 crores to be spent in Q4.
Okay.
So the balance about between almost close to 100 crores would be spent in FY24. And that would conclude our current approved capex from the board.
Right. So 350 crore is a mota-moti number, 340, 350 crore is the current number, right?
No, we are also spent
22 also.
some. So as I said in the earlier question, our total spend will be just around between, because this also includes some maintenance capex and replacement capex. This is the total capex will be slightly under 400 crores, out of which we have already spent part of it in the previous financial year. So this year would be close to 250, and the balance in the next year.
Right. So current approved capex will finish by FY24, which is 100 crore in FY24, right? Roughly.
Yes. Yes. And as I said, I mean, since we have cash on balance sheet and we intend to grow, so if anything is approved by the board on the proposals that we evaluate and take it before the board, that would be announced in the subsequent quarters if it is approved.
But what are the projects under execution, which is NFI and PTCF and NTCF, that will take care of the within the next 100 crore next year, right?
Yes.
Right. Thank you so much.
Thank you.
Thank you. The next question is from the line of V. Ramakrishnan from Equity Intelligence. Please go ahead.
Good afternoon, sir. Thanks for taking my question. Sir, recently we have rebranded. I think earlier it was a BK Birla Group company, now Aditya Birla Group. So is anything to what has changed? Is there any change in the way the company is looked at it? Can you elaborate on that? And the second question is, this Surat is a big market for the nylon yarn. So Surat has been doing very badly for last, I think, 5-6 years. So can you throw some lights on what you expect and what drives the demand from Surat market?
Okay. So I think we as you would have seen now from this quarter, we have changed our logo. So it is just showing that we are now more integrated with the Aditya Birla Group. It was already, our chairperson was Mrs. Rashri Birla since many years. What it means is that
Ladies and gentlemen, it seems that we have lost the line for the management. We'll request all participants to please stay connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. Please remain connected. We are trying to reach the management line. We request all participants to please stay connected. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. Sir, over to you. Please go ahead.
Sorry, we got disconnected. I'll start with the first part of the question regarding integration with Aditya Birla Group. I'll just repeat it even if it is already heard, because I'm not sure at what point we got disconnected. So we were already integrated. As I said, chairperson was Mrs. Rashri Birla since a very long time, and a lot of people had already come from Aditya Birla Group. So the management part was already integrated. Nothing changes in that term. What the integration brings is that now we have a common logo with Aditya Birla Group, as well as the processes part gets more integrated. The opportunities for our employees to move within and out coming from Aditya Birla Group becomes more easy. All processes which the group is very proud of, while most of it is rolled out, whatever balances remain will also get rolled out, and it becomes much more integrated than what it has been in terms of the people, processes, and some other processes. The second part regarding the Surat market, yes, the market is, especially in the current last few quarters, has been quite challenging. And it has been challenging for the entire value chain, more from impacted by imports from China at every stage, as well as rising input costs for the entire value chain, including ourselves. Surat, while has its challenges, is also the most promising market because a lot of investments are also being made in, particularly in the downstream weaving and processing sides, which allow the producers to compete with imported fabrics and other products which are getting imported. So many new machines, many houses have put up the latest machines to be able to compete with products which were coming from, particularly from China and other countries. And that is a good positive sign in the overall context of the textile value chain. However, challenges would remain because this is an industry which has very low duty protection up to the yarn and processed yarn stage. So these challenges with respect to high energy prices and others, as soon as there is a improvement or correction in the underlying fuel cost, I think that will be good for the entire industry. But still remains, Surat, in our view, would continue to remain one of the largest market for synthetic yarns and fabrics.
Sir, my other question is it the capacity is fungible? Suppose if you see a greater demand for NFI, can you shift from nylon yarn to nylon filament yarn to nylon tire cord, NTC? So is it fungible, your production capacity?
Our current configuration is more fungible between NTCF and PTCF, particularly on the downstream, the conversion part, the dipping part. In NFI, it is not readily fungible because we have to make some modifications in the equipment. So it is only when we see a clear trend of changes that we have to do, and we may have to make some small investments as well, that we can make it fungible. But per se, to say that from within a month to month it can be switched between NTCF to NFI, that is not possible on the current configuration.
Sir, if you look at your last, I think, several quarters, there is lot of variations. I think sometimes the EBITDA margin goes to 12, 14, 15%, then comes to 4%. So from the management point of view, what are the steps you are taking to have this volatility, to bring down the volatility, and on a year-on-year basis, what kind of a EBITDA margin you will be comfortable with?
See, most of the volatility is external driven and to a large extent outside our control. For example, changes in power and fuel prices is something that we have very little control on. But what we are trying to do, and which has already been announced earlier, is that we are will be sourcing some power from our hybrid JV, which should start in Q1 of FY24. So that will bring more stability in our power prices because that prices don't fluctuate with the changes in other, fuel prices either from coal or other sources for generation of power. As regards the demand side, that has been volatile mainly because of the geopolitical issues, as I explained earlier. And once these things are, reduced, we will not be out of it completely, but we do expect that that will bring more stability in demand and which has an impact on margins. Thirdly, volatility is also impacted by how the external other countries are operating, particularly China. And China has witnessed this COVID-related lockdowns, which has impacted the value chain significantly across the world because their domestic demand has fluctuated. Their some regions were operating, some were closed. Now, since China has opened up and it is expected that the kind of COVID restrictions that imposed may not remain in future. So this gives us some confidence that the volatility going forward should be less than what we have seen in the current financial year. We do our normal expectation on EBITDA margins is around 10%, and we hope that that should happen in next few quarters.
Okay, thanks. All the very best, sir.
Thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Durga Das Potra as an individual investor. Please go ahead.
नमस्कार सर, बहुत बहुत धन्यवाद ये अपॉर्चुनिटी देने के लिए। ये आपका एनपीएम और ओपीएम डाउन दी 3 लाइंस में क्या रह सकता है सर?
सॉरी, आपका क्वेश्चन?
नेट प्रॉफिट मार्जिन एंड ऑपरेटिंग प्रॉफिट मार्जिन।
हाँ, डाउन
अच्छा, ऑपरेटिंग प्रॉफिट मार्जिन मैंने आपको बताया करीब 10% एक्सपेक्ट करते हैं नॉर्मलाइज बेसिस पे।
डाउन दी लाइन 3 इयर्स।
हाँ जी,
डाउन दी लाइन 3 इयर्स क्या रह सकता है?
हाँ जी, अब उसी रेंज में रहना। देखिए, आज ये प्रेडिक्ट करना कि कोल के प्राइसेस क्या होंगे, पावर के प्राइसेस क्या होंगे, बहुत डिफिकल्ट है क्योंकि इतने मल्टीपल सिनेरियोज हैं, उनको प्रेडिक्ट करना बहुत मुश्किल है। हम भी रिसर्च रिपोर्ट्स और हमारे जो बाकी वेज होते हैं प्रेडिक्ट करने के, उसी बेसिस पे करते हैं। सिमिलरली रॉ मटेरियल प्राइसेस को प्रेडिक्ट करना या डिमांड को प्रेडिक्ट करना, बहुत एग्जैक्ट करना बहुत मुश्किल है। लेकिन जो हम स्टेप्स लेते हैं, जो हमारा कॉस्ट रिडक्शन पे फोकस रहता है, जो वॉल्यूम ग्रोथ पे फोकस है, हम उन सब चीज़ों को मिलाकर और एक प्रेडिक्टेड वैल्यू को लेकर देखते हैं, तो अराउंड 10% हमारा नॉर्मलाइज्ड ऑपरेटिंग मार्जिन रहना चाहिए।
और एनपीएम
नेट प्रॉफिट मार्जिन हमारा नॉर्मलाइज्ड ही रहेगा, जो अराउंड 7।
PM will depend on operating profit margin. What the operating profit margin is, generally our depreciation is in the range of 40 crores today, and going forward, when all the expansions are on stream, it will be somewhere around 55 crores. So 15 crore will be the increase, and there are not many loan which we have taken, so interest cost would continue to be negligible. So depending on what is the operating margin, net profit margin will be derived. So you can take 55 crore as estimate for depreciation and a negligible amount for interest cost. So that will give you operating profit, net profit margin.
ओके ओके, धन्यवाद सर, बहुत बहुत धन्यवाद।
Thank you. The next question is from the line of Mehul Parekh as a shareholder. Please go ahead.
Good afternoon, sir. I have 4 questions. One is that our raw material prices in terms of caprolactam is a lot dependent on China imports. What about the PET chips that we use for PTCF? Is it more locally available and competitive globally, or is it again import dependent essentially from China? Second is that we are doing a lot of machinery replacement. So I would like to know that with this machinery replacement, will our margins expand, the EBITDA margins, will they expand by a percentage or two or more because of the efficiencies of the machinery? Third is the penalty. We have paid 7.5 crores under, and there is a case going on. So in case we end up losing the case, what will the bloated amount with interest and penalty come to fully? And fourth is the PTF industry. What is the annual demand from India for PTF in terms of tons?
Okay, so the raw material for PTCF is both domestically and available, and also from imported sources, and these are more multiple players are there, and availability is quite easy. So we would be having a mix of depending on prices, but which are also linked with international prices. So we will have a mix of sourcing both from domestic as well as international, and which can change based on if there is economics of one over the other. As far as machine expansion, expansions as well as replacements are concerned, that's a regular exercise, and our endeavor is to keep on improving our operating costs, reduce operating costs. The new equipments would be definitely more efficient than some of our old equipments whose life is sometimes in range of 15 or excess of 20 years.
Yeah.
So that will definitely help, and these are all part of the reasons that we take capex replacement for expansion. For the excise duty, the status remains the same as mentioned in our notes to accounts. We have already, the department itself has recalculated the liability at 7.3 crores. Which has already been deposited, and since we feel that we have a strong case that even that liability should not be there, we are in appeal at Supreme Court, which has still not been heard. While the department itself has gone against its order in the CSTAT to challenge the recalculation. We feel that it is more administrative because their commissioner itself has calculated, so we feel that we have a strong chance that the liability should not, at the basic level, should not go beyond 7.3 crores. And we have also filed a case in the Bombay High Court for non-levy of interest, since our case is strong on terms of listing. So we feel that, there is no finality on the exact liability, but in the current scenario, we would feel that it should not exceed at the basic level at 7.3 crores. But then these are subject to rulings by statutory at various levels, and we'll keep the shareholders and investor community updated on any development on this front.
Yeah, but such since this is a very old liability, the 7.5 crore could exceed 100 crore also, with interest and penalty. So that's why I was just asking you this question.
So we have already paid principal amount. So 7.3 crores has already been deposited.
Okay, this was deposited recently, right?
So this was deposited long back.
Okay.
Maximum interest liability which could be there can be around similar amount, 7 crores only.
Okay.
8 crore rupees, and there is a equal amount of penalty. So if we lose the matter, then there is an equal amount of penalty, which is again 7 crores. So
okay, so the maximum, if you lose the maximum,
21 to 22 crore could be the maximum liability.
Okay, correct. And this machinery replacement, what I was asking was that can it enhance our EBITDA margin by 2% or more? Is it possible?
No, if you see our capacity expansions, we are not expanding or replacing the entire capacity. So it will have an impact, but not to that extent that for the entire operations it will increase by 2%. But
Okay.
it will impact, yes, there will be some improvements.
Yeah. And in PET chips, why I asked you about the India availability of raw materials, that are we globally competitive at PET chip level to be able to supply, meaning to withstand Chinese competition on PTCF?
We think so, because since it's a domestically produced product as well as imported, and these are all international prices. So
correct.
Prices are similar at most of the, in China as well as, because even the Chinese producers would buy that. There are very, I'm not aware of anybody who makes their own PET chips and then converts into PTCF. So they would have similar cost structures compared to the PET chips that are available in India. So we should be competitive on that front.
Right. And PTCF annual demand from India, any figure on that in terms of quantity?
In our estimate, there are no reported numbers, but in our estimate, the current demand should be in the range of between 30 to 35,000 tons per annum, and with a projected, expected growth of between 8 to 10% year on year.
Oh, that's it. Thank you very much, sir. Thank you very much.
Thank you. The next question is on the line of Vipul Shah from Sumangal Investment. Please go ahead.
Sir, the investment which we have made in renewable power, so what percentage of our power will be renewable from next year onwards?
So for the Bharuch operations, almost 25% power will be from renewable on an annualized basis. The renewable power varies with season, but our expectation is that 25% of the annual power should be, and on a company basis, it will be around 15% on combined, 13 to 15% on a combined basis.
So what will be the tariff for that power?
So we had said we will save compared to the grid rates between 15 to 16 crores per annum based on the tariff that we've agreed.
15 to 16?
Crores per annum.
15 to 16. So that will start from first quarter of next year, right?
Yes.
And regarding your answer to the fungibility between nylon tire cord and polyester tire cord, so hypothetically, 100% of the nylon tire cord capacity can be switched to polyester tire cord, sir?
No, the spinning machines are different. But post-spinning, there are processes which require it to be converted into cord, then into fabric, and then it is to be dipped. These three processes are common between NTCF and PTCF. So we just have to add spinning capacity, new machines for spinning of PTCF. The balance downstream equipments and facilities are common and fungible.
Okay. So you have that flexibility to maneuver your production as per the market demand, right, sir?
We'll have to add spinning capacity, and then our fungibility will improve, and that would be the, long-term vision to add that flexibility.
So if you want to add spinning units, so what will be the capex if you want to become fungible?
It's not large. It will be under crores for a decent capacity expansion. It won't be a large capex outlay.
So that capex, that is part of your current capex, or it is not part of your current capex?
No, current capex is only the first, what we approved from the board. As I said, in future, looking at the demand growth of PTCF, we'll take decision on expanding our spinning capacity.
Okay. So, okay, sir. Thank you.
Thank you.
Thank you. A reminder to our participants, please press star and one to ask a question. The next question is from the line of Anik Mitra from Finartha Research Advisory. Please go ahead.
Good afternoon, sir. Thank you for taking my question. Sir, after the expansion, what would be your market share in this particular segment?
There are no, reported volumes. It's not easily available in terms of because many players, other players have integrated other products, so it's again given on combined basis. But our estimate is that we should retain our market share post expansion because other players also are expanding. There could be a 1 or 2 percentage point improvement, but we are not sure what kind of volumes are coming. We just have estimates, and that's why we will not like to give a number. But we, on a realistic basis, we should be able to maintain our market share post expansion.
Okay. Sir, can you throw some light on the anti-dumping duty on radial tires? Is it still continued?
No, the anti-dumping duty was first extended up to December 22. But while there was again a DGTR recommendation for continuing the duty, the Finance Ministry has not accepted it, and that duty on radial tires is not has been removed since January 23.
Okay. Okay, sir. Thank you. This was from my side.
Yeah, thank you.
Thank you. The next question is from the line of Chandresh Malpani from Nivesha Investment Advisors. Please go ahead.
Hello.
Yeah.
Yeah, thanks for the opportunity. Sir, only one question. Sir, what players are coming up with PTCF capacities? I believe SRF is already there. So, any other players?
We are not aware of anybody else entering into this segment.
Okay, so sir, and next question was SP. There is steel tire cord fabric as well. So, where is it used basically?
Sorry, steel tire cord? Yeah, steel tire cord is used in radial tires of medium and heavy trucks. So that's the radial tires. While PTCF is used in passenger radial tires, steel tire cord is used in the truck tires for radial tires.
Okay, so we are not
from our side for steel tire cord.
Sorry, sir, I missed it.
We are not having any plan to enter into steel tire cord.
Okay, okay. Thank you, sir.
Thank you. A reminder to participants, please press star and one to ask a question. Ladies and gentlemen, as there are no further questions on the participants, I now hand the conference over to Mr. Prashant Sharma for closing comments. Thank you, and over to you.
Yeah. On behalf of Quantum Securities, we thank everyone for joining us today. We look forward for staying in touch in future quarters. Have a nice day.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Quantum Securities Private Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect.